and the borrower or the person acquiring their home is ending up paying more money than the conventional banking, while thinking that they're getting the check marks on the letter of the law, the wording of the law, and not even getting the intent. Assalamu alaikum wa rahmatullahi wa barakatuhu. Welcome everyone. This is our new series of podcasts, inshallah, bringing to you the details and nuances about Islamic finances. The primary purpose here is so that we see a whole variety of different types of people. So there are people who just live at the edges and do not engage in the conventional systems at all. Sometimes they get burnt out and then they just go all in and they're like, okay, everything is permissible without understanding the nuances. They are probably worried about what's the difference between conventional or Islamic. How can I, do my day-to-day business or living or car or home or what have you? And then they just go all in and everything that's available, they're like, yep, I'll sign the contract and do that. So the idea here, inshallah, is to start understanding and appreciating the maqasid, the purpose behind the laws of Islamic finance, and how you can navigate that in your day-to-day life. And we have with us one of the experts in the fields within North America, Dr. Ma'an Alhuda. Assalamu alaikum, Sheikh.
Alaikum salam wa rahmatullahi wa barakatuh. Hayakallah. Thank you for having me here.
Thank you, Sheikh, for joining us. Dr. Ma'an, for a quick introduction, has a PhD in Islamic Studies from American Open University, Bachelor's of Economics from Al-Azhar, and has been teaching the subjects of Islamic finance as well as many others. But we will be focusing on Islamic finance here today. But if you are not aware of the Sheikh and his work, alhamdulillah, he has a lot of videos available on the YouTube as well that deals with common folks and their Q&A. And I recommend people to go and check it out. As well as Sheikh is also running a program of Masters in Islamic Finance. And that is something we'll be talking about as well. So there's a lot that we can benefit from the Sheikh. Definitely we'll be focusing on Islamic finance, but there's a lot more to learn. May Allah subhanahu wa ta'ala put more barakah in the work of the Sheikh and help us all benefit from it. So without further ado, Sheikh, thank you so much for joining. We're going to take advantage of your time. I have checked a few of your podcasts as well. I hope the audience will check it out as well. And then we want to kind of build on that and perhaps cover angles. There will be some overlapping and there'll be some new angles that we want to cover that will be beneficial for our students, inshallah. So inshallah, to get started, like to see if you can, inshallah, share some light on what is the purpose of Islamic finance? Like, what is Islam trying to achieve, or the goals of the Islamic finance and the rules around it? What are the maqasid and objectives of it?
Naam, Bismillah, alhamdulillah, wa salatu wassalam ala rasulillah wa ba'd. Again, thank you for having me in this podcast. May Allah subhanahu wa ta'ala put barakah and qabul in it. We all believe that Islam, alhamdulillah, is a comprehensive way of life. It governs and organizes your relationship with Allah subhanahu wa ta'ala, with yourself, with your family members, with the community at large. And when it comes to interacting with the community at large, there are transactions and interactions. Interactions, the akhlaq and the manners, the attitude that you need to show, the sadq, the amanah, the honesty, the transparency that you have to exemplify when you deal with others as a Muslim. And there are some transactions when you buy, when you sell, when you rent, when you get involved in any like money matters or anything that's related to money. There are certain rules and regulations that Allah subhanahu wa ta'ala said either by himself in the Quran or through the Sunnah of the Prophet alayhi salatu wasalam, that serve the maqasid, or the main objective here is to facilitate life for people. Like the transactions have to be as simple, as easy as possible. People actually depend on one another. No one actually is independent in everything. Everybody needs the help and the support and the expertise and the time and the effort of other people around. So we have to have a system that governs all that. If I may summarize the whole maqsad, if you wish, the objective of Islamic finance is to implement justice and to make sure that there is no dhulm, there is no financial exploitation when it comes to funding. Where did we get it from? Okay. If someone is just asking Allah subhanahu wa ta'ala a very simple question, Ya Allah, why you sent all those prophets and all those messengers and all those scriptures? Okay. The answer actually is in the Quran itself. Bismillah ar-Rahman ar-Rahim. لَقَدْ أَرْسَلْنَا رُسُلَنَا بِالْبَيِّنَاتِ. We have, which could be translated to English, we have sent our messengers with clear messages. وَأَنزَلْنَا مَعَهُمُ الْكِتَابَ وَالْمِيزَانَ. And we supported those prophets and messengers with al-kitab, scriptures, wal-mizan. Al-mizan actually is the scale, which is a symbol of justice. Okay, And then Allah subhanahu wa ta'ala answered that question by saying, لِيَقُومَ النَّاسُ بِالْقِسْطِ. So people actually would stand and implement justice. Justice actually in this ayah covers everything. Justice in Aqidah, that you acknowledge that Allah subhanahu wa ta'ala is your Khaliq, your creator, and your sustainer. Uh, Justice in ibadah, that you worship the one who only deserves to be worshipped, which is none but Allah subhanahu wa ta'ala. Justice in akhlaq and manners. Okay. Do not be arrogant, do not lie, do not deceive, do not steal, do not and so on and so forth. And justice in muamala as well. Do not take advantage of other people. So make sure that when you transact, when you buy, when you sell, okay, when you rent, when you get involved in any business transaction, that no one actually is taking advantage or exploiting other people because he or she does have money while they do not. Okay. Do not remove all the risk, okay, and the liability from your shoulder when you give money to others and put it in the shoulder of others. Okay. The Islamic finance system is all about risk sharing. The conventional system that we are experiencing nowadays is all about risk shifting. Risk shifting means that you go to a bank, in a conventional bank, you apply for a loan, any loan, personal loan, business loan, investment loan, construction loan, student loan. It's very simple. You take $100,000, for example, for 5% APR, annual percentage rate. What does it mean? It means that if you are to utilize that money for one complete year, the bank actually is expecting you, is mandating you, to pay 105. The principal is 100 and 5,000, which is the APR on top of it. If you want to keep that money, okay, utilized for 3 years, then the total has to be paid back as $115,000. Now, once you take that money for business purposes, maybe you make a profit, maybe you break even, maybe you incur loss, maybe you go even bankrupt. The bank actually doesn't care about the outcome result of that loan. Okay, they can go after you in the court, okay, enforcing you to pay the principal and the premium on top of it, regardless of the outcome result. That is the risk shifting model that we Muslims do not believe is the most just and fair one, right? The risk sharing one, instead of you taking $100,000 construction loan, no, the bank or the Islamic bank would just do some background check, make sure that you are specialized enough, you are expert enough. Once the bank does have confidence in you that you are the right person to take that money, they would give you the money based on mudaraba. Mudaraba means trustee partnership. You take that $100,000, okay, as a partnership. The bank will be the sleeping partner or the silent partner or the inactive partner. You take that money, you construct, you do business, home building, whatever profit you agree upon as a certain percentage of the net profit of the business, not a certain percentage of the principal that you have received from the bank, right? So the bank is giving you $100,000, let's say for 10% net profit from your business, based on their study and analysis. They think that they deserve 10%, okay, of the net profit of your business based on the $100,000 that they have given you. If and only if there is a profit, you will be giving the bank 10% in addition to their principal once the business cycle is over. What if there was no profit for whatever reason? Well, you pay them back the $100,000 and there's no profit. Okay. Worst case scenario, something happened, you did not make a profit. Well, you lost even part or even all the capital that had been received, by you from the bank. Something like act of God's, recession, whatever the situation might be. Well, believe it or not, the bank cannot even go after you and ask for the principal. See, that is the risk sharing one. If there is a profit, everybody will be, sharing the profit. If there is a loss, everybody will be losing. Okay, you as a construction company, you'll be losing your labor and work, and the bank or the financier in this case will be losing its money. You see, that's the difference between the risk sharing and the risk shifting. Risk shifting actually is when the bank is just sitting relaxing like me, waiting for the principal and for the premium on top of it without taking any risk. That is not fair. Okay. Risk sharing, when the bank is giving you the money, not as a loan, as a partnership, as an investment. Okay. And the bank will be just waiting for the outcome result of that project. If there is a profit, they will be taking their profit. If there is no profit, they take their principal and just master and going back home. That model actually is the absolute justice that Allah subhanahu wa ta'ala is calling for when He said, لقد أرسلنا رسلنا بالبينات وأنزلنا معهم الكتاب والميزان ليقوم الناس بالقسط. So people would stand for justice. Justice, whenever it is implemented in finance, it means that you give the money as a partnership. You do not give the money as an interest-bearing loan.
Jazakumullah khairan, Sheikh. So in summary, so we talked about feeding. Number one is that the primary goal of Islamic finance, just like the whole religion, the whole Sharia, is to establish justice as Allah subhanahu wa ta'ala say, if it's not for an individual, but for the communities. Then we talked about the notion of obviously risk sharing versus risk shifting. So traditionally, you have your loans or bonds or what have you, where basically you're given a finance after some due diligence and you're required to pay back the capital as well as interest on top of that. The opposite of that is profit sharing model, which is a clear permissible one. I'm going to ask a quick question before we go. We do a deeper dive into the other forms of it. So for profit sharing, is there any sort of, is it just basically dependent on the two parties agreeing on whether it be an 80-10 split or 80-20, 70-30, whatever it is? Is there any sort of distinction in terms of from a Sharia perspective or whatever the markets dictate and the parties agree on? And then the second thing tied to it is that one of the things that many people offer now is something called the hurdle rate, right? So if I generate X amount of profit for you, then we share 70-30 or 80-20 or whatever they've agreed on. But if I'm not generating X amount of profit, then I don't make any money. You keep all the profit for yourself. Is there any problem in this sort of a hurdle notion as well as the portion of the profits?
Okay. Now, for the first question, there is no limitation or specification. As long as there is a mutual consent between the two contracting parties, then it's up to the supply and the demand, right? You ask for 20%, 30% maybe like countered back by another offer. So once you reach to a conclusion that, okay, we both parties agree that I'm entitled to 20% of the net profit because of the principle that I'm putting, to this project. As long as it is agreed upon between the two parties, there is no restriction here. There's no restriction. Now, the other question, if I understood correctly, can you set management fees and performance fees? Management fees that I will be charging 1%. Okay, this is my hussa, this is my commission because of having hands-on work on the project and utilizing your money for business purposes. I will be entitled to 1% management fees. Now, if the profit reaches the cap of 15%, whatever is on top of the 15%, I will be entitled for 50% of the extra. Would that be fine? Yes. I mean, if you want to incentivize other party, tell him, listen, this is your management fees, and if you if you do a good job, okay, if you reach a certain limit of profit and you exceed it, whatever goes beyond will be shared 50-50, 20-80, 70-30 between us. That would be fine as well.
Jazakumullah khairan. So let's dive deeper into the other means of financing. And I think before we go into that, there's a side topic here, which is, the concept of hila, right? As we see, Bani Israel using it, from a fishing perspective, right? So don't fish on Saturday. So that's the letter of the law. As long as you're not fishing on Saturday, you have a check mark. If the computer is checking the law, okay, I'm not fishing on Saturday, but I can put the nets on Friday and collect on Sunday and so on and so forth. So how important it is, because that's something that many people obviously do, is that, okay, I'm going to meet the letter of the law, make sure all the conditions are check marked and it does not qualify as interest or riba in the Islamic Sharia sense, but then I may not be meeting the intent of the law. So how is that relevant in today's time? If you can shed some light on that, Sheikh.
Sure. There is a well-known فقه maxim or legal maxim or قاعدة فقهية. It goes العبرة في العقود للمقاصد والمعاني لا للألفاظ والمباني. What matters in business transactions is the essence and reality, not the wording or the formality. So what we care about the most is not the wording that or the letter, as you said, that people use. What we care about is the genesis or the actuality of the agreement. I'll give you an example. Someone borrowed money from Bank of America. Okay, interest-bearing loan, straightforward. Some way, somehow, the loan officer was able to manage, and instead of asking him or her to sign a promissory note, this is to certify that XYZ has borrowed $100,000 for 5% APR. Okay, he gave him a document, and on top of it, it was written Murabaha contract. or musharaka contract or ijara contract, would that make the whole deal halal because you just changed the name from promissory note to a murabaha one? The answer is absolutely no, because the essence of the deal is that you are borrowing money with interest. Okay. Likewise, if a certain so-called Islamic mortgage company is offering you a musharaka or declining partnership or lease to own, but it is very, very obvious in the contract that they advance money, they pay on your behalf $500,000, and you have to pay it back $800,000 within the next 30 years, right? If it is ijara, for example, ijara means lease to own. As you know well, in the ijara agreement, okay, the financier actually has to be the owner or the landlord of the property. Like, because of the ownership that you are taking and the risk that associated with owning a property, you justify the profit that you are making. So in this contract, if the financier, okay, if the lessor, for example, is not the owner of the property from one side, and you as a tenant, as a lessee, you are fully responsible for the maintenance and for the tax and for the insurance, right? If there is anything like wrong happened to the property during the 30 years agreement, you are fully responsible. Then what kind of risk, what kind of liability, okay, the Islamic mortgage company is taking in this case? They do not own the property. They are not responsible for maintaining the property between maintenance and tax and insurance. Well, believe it or not, that particular lease agreement is not a Sharia compliant one. Because at the end of the day, that company is advancing $500,000, taking it back $800,000 with no risk. Can you show me any difference between this scenario and somebody else who goes to Chase or Bank of America or Wells Fargo or Capital One, borrowing $500,000, paying it back $800,000? There is no difference whatsoever. So again, what matters in business transactions is the essence and reality, not the wording and the format. We have to make sure that we are not deceived, right? Okay, or we are not manipulated or fooled by those like big terms that some companies use nowadays. Oh, this is ijara, milkul ayn or raqaba. They come up with those big names to impress the community, showing them that, oh, we know what does Islamic finance mean. Well, with all due respect, this is not what Islamic finance is all about. You need to show me in the contract and like on the ground how much risk you are taking when you apply the ijara or the musharaka or the murabaha, right? Or the mudaraba, whatever the contract might be. And based on that amount of risk necessary to be involved in that process, okay, the fatwa will be that yes, this is a genuine, actual, real, authentic, halal mudaraba or otherwise.
Jazakallah khair. So we'll dive a little bit further into the Muraba example here, which is essentially, if I were to simplify what our audience is that, let's say if you want to get capital, you want to buy a home, right? So let's say the price right now in Toronto is like $1 million home, what have you, right? So you go to a bank, they say, okay, you'll pay me 20% down, what have you, and then the rest of the amount you'll be paying me in 25 years. And then let's say if you're able to get a fixed interest rate mortgage. So essentially you will know that at the end of the 25 years, the price of the home will be such and such, right? Now you go to a Muraba company, the traditional Muraba company or the one that exists today, which do not potentially deal with some of the nuances that you have mentioned. They might say that, okay, you know what, we'll buy the home for you and then we'll sell it to you at a markup. That markup would potentially, well, usually in most cases, will be even higher than the conventional bank. Right. So if we take it back to your example or your notion of risk sharing or risk delegation, there is this understanding that murahaba in principle is permissible. Now, how does that transaction apply here? That, okay, you know what, they say, look, we're going to have $1 million home, but we want you to pay us 3 million or 5 million over 25 years.
Here is the answer. You can classify the different Islamic modes of finance into two different major categories, major ones. One of them is called equity-based finance, and the other one is called debt-based finance. Debt-based as opposed to equity-based. Now, from a pure Sharia perspective, equity-based is the most preferred mode of finance, while the debt-based one is the least preferred one. Okay. Debt-based actually means murabaha. Debt-based means murabaha. Why we call it or we classify it as debt-based? Because there is no long-term partnership between the financier and the customer. Okay, murabaha means you step in and you step out. Okay, the customer would come to you as an Islamic bank telling you, listen, I'm interested in this property. Okay, after checking like his application, his income, and the مش عارف income, debt ratio, credit scores, everything. Okay, upon the approval of his application, you would step in by purchasing that house for $500,000. Okay, spot sale, and you sell it back next day in the morning or after a few hours, right, for $800,000 in installments, like credit sale, for the next 30 years. Where is the risk here? The risk actually here is captured through those moments or hours or days where you purchase the property. You become the legal owner of the property. There is a possession involved, legal ownership involved. Now, because of the risk that you have taken, right, you justify the profit that you are looking for. Here is the problem in the real life. And instead of those like Islamic banks purchasing the property, they have like a title transfer. Title transfer means that this is a transitional period where the bank is getting involved in owning that property on papers only for a few seconds, and they do what is called simultaneous closing. So while sitting together on the table, the bank representative would sign a document that, okay, we are buying this house, and then before even standing, we sign another document that we are selling that house to our customer. That is the hila that ruins the whole process and make it a non-Sharia compliant one. Because again, we do not go with the letter of the law, we go with the intent, with the essence of the law. The whole issue actually is to make sure that you own the property and you are not lending money with interest. If you go with that simultaneous closing, right? Simultaneous closing, along with the title transfer, there is no ownership like fully captured here, then you end up just giving $500,000, taking it back $800,000 within the next 30 years. No maintenance, no tax, no insurance, no appreciation, no depreciation. What is the difference between your practice and the practice of the conventional loan? And by the way, that's why the OCC, the Office of Collateral of Currency, back in 1999 issued a letter when there was a group of Muslim investors in the USA here wanted to apply murabaha. Upon like deep analysis of this process, they drafted a legal fatwa, if you wish, right, or a verdict that the murabaha process is not different from the conventional loan, and that's why they did allow that bank to do it, because your practice actually is not a real one. Right? You
Mm.
just take the murabaha, you do not own, you do not take any risk, so you end up actually having just risk shifting mode of finance. Although you claim risk sharing, you are not sharing any risk. Back to our initial discussion, I was saying that the least preferred mode of finance is the murabaha because it is a debt based, and this actually does not serve the spirit of the Islamic finance, does not, serve the justice or the adl that you want to apply. Now, the most preferred one is the musharaka.
Okay. Now, if we can just pause here for a second and then just do quick follow-ups on the debt-based one as well. So what I've understood so far is the common way the Muraba contract is implemented within North America is problematic as per your research and the opinion of many different scholars. And the borrower or the person acquiring their home is ending up paying more money than the conventional banking, while thinking that they're getting the check marks on the letter of the law, the wordings of the law, and not even getting the intent. Is that correct capturing of that?
I'm not sure if they charge more when it comes to murabaha. They do charge more when it comes to musharaka. عرفت؟
So
musharaka is
yeah, you usually like Murab, like so if the conventional is going for 4, because they have to pay their investors as well. So usually it's like 2-3% more, apart from even because obviously there's this contract that happens. You have to do this extra contract, the title transfer, and what have you. So you usually end up paying definitely more than what you would pay if you go to directly a conventional bank. At
well,
least in Canada, what I've seen.
not, I do not mind at all paying more if I'm positive that this is a Sharia
Yeah,
compliant one. But the
right.
problem becomes even worse and worse when I'm deceived by that company, okay, doing a very conventional process, claiming it or just labeling it, like putting a sticker on it that this is a Sharia compliant one, and then on top of that they charge me more. I mean, this
Yeah,
makes the problem even worse and worse. عرفت علي?
yeah,
Uh, we need to understand something important here. Islamic mortgage companies in the USA, most of them are operating within the mortgage system, like they securitize contracts and sell them in the secondary market, namely Freddie Mac and Fannie Mae. So they have to abide by the law. Okay, abide. They have to go with by the book, as they say. They have to show Freddie Mac and Fannie Mae that this is a very conventional loan. This is a principal plus interest. That's it. There is no liability, there is no risk, there is none of the above, right? Uh, as banks, as conventional banks, or even so-called Islamic banks, as long as they operate within the system under the umbrella of the mortgage code or mortgage system in the USA, they cannot practice genuine murabaha because again in the USA you cannot, as a bank, you cannot make money from real estate. You make money from lending with interest, period. So even if you claim that you do apply ownership for murabaha purposes, your application is not genuine enough. And this is actually the gray area that makes people confused. Is this a real, like, Sharia compliant product or not? If those banks are operating off the industry, like working by themselves, like syndicating, bringing money from community members, okay, purchasing homes, and then like selling them with the profit, or doing musharaka, then the practice most probably would be way more Sharia compliant, because you do not have to report to the secondary market. You don't have to abide by the rules and the restrictions of the secondary market. You operate independently. And we do have some like wonderful examples here uh, for very small size Islamic mortgage companies who operate just independently. Okay, they have their own network, they syndicate, they tap on the resources of the Muslim community and some other community members from different faiths who believe in the ethically and socially responsible, finance. They put their resources together, purchasing homes, selling them back for profit, or doing, musharaka, and they do like a wonderful job. Okay, with no violations, with no glitches in the contract, because they are independent from the secondary market. They do not report to Freddie Mac and Fannie Mae.
So what would be needed to have the like maybe three or four elements or clauses for to make a muraba contract legit under the Sharia? Like, does that require like a day of ownership or what have you? And then because I think once you made that sale, then it's the buyer's responsibility, whether it be like insurance or taxes or utilities, whatever. And then he or she is responsible to pay the full amount to you in over the period of years, whatever it is.
I might be like too strict and too conservative, but in my opinion, if we can just eliminate the murabaha completely and get rid of
Yeah.
it and focus on the musharaka, that will be way better. Because again, murabaha, if and only if it is implemented correctly, it is the least preferred mode of finance, because it is a debt-based one, or because it is a debt-based one. What if it is implemented in a wrong way? You see,
Mhm.
like situation becomes even worse and worse. So like my vote would be, forget about the murabaha and focus on the musharaka, declining partnership. If you want to operate as a private equity, you create an LLC away from the secondary market. You purchase the property as a financier, as an Islamic mortgage company. You purchase the property jointly with the customer. Okay, you show your name on the title and on the deed of trust that you own that property, and then you practice the declining partnership by charging your customer rent for the percentage of equity that he or she does not own, and you add on top of it a few hundreds of dollars in order for him or her to redeem more shares, right? And you share the maintenance and the tax and the insurance on an annual basis throughout the whole agreement long of 20 or 30 years. That is the most just and fair and adil mode of finance. So I would 100% vote for the declining partnership, because it is an equity base. You own the property. You feel the pain of your customer when there is a maintenance or tax or insurance. It's not in and out. You just get in, you purchase the house, you sell it for a markup, and ma salam, you leave, and you just leave your customer 30 years struggling by himself. That's a semi-conventional, process, although it is called murabah.
Okay.
Yeah.
Okay. So let's dive into deep diminishing musharaka, right? So you start maybe 80-20. The financier owns the property 80%. You're doing the 20%, and then So does that whole 25 years and what rate it will diminish at, does that all have to be agreed upfront, or it can be negotiated and discussed every 5 years or so? And then there's something attached to it is that the parties can agree on who is paying which expenses of the running costs of the property.
Okay, ideally speaking, you need to do not appraisal, but like re-evaluation of the market value of the property and the fair rental value, because declining partnership, involves purchasing equity from the financier or the mortgage company and renting their share. Is that correct? So it is
Yeah.
fair enough to check both the fair market value as well as the fair rental value, and you adjust and you modify the monthly payment accordingly. Now, ideally speaking, again, this is called sharikatu aqd and not sharikatu milk. Ideally speaking, right? This is a contractual partnership between the two parties and not acquisition partnership. And based on that, if the mortgage company owns 30% of the house and the customer already redeemed 70%, then if let's say like the total cost for maintaining that house in 2025 ended up to be $10,000 between maintenance and tax and insurance, right? Then $3,000 have to be incurred or paid by the mortgage company. $7,000 have to be incurred by whom? By the customer, because he owns 70% and they own 30%. Now, in the real life, declining partnership differs based on which company you are referring to. Some of those companies actually do strive to make it as Sharia compliant as possible, and some of them actually do not. They just use the term declining partnership, but when it comes to the essence and reality of the contract, it's just a semi-conventional, straightforward loan, right? Uh, how much they practice here when it comes to appreciation and depreciation, there is a glitch in the contract that they set the price of the house for the next 30 years from day one. Okay.
Mm.
What if down the road after a few years there was an appreciation or there was a depreciation, right? How come that you fix the price from day one while the market value is subject to fluctuation up and down? How come that you ask your customer to be fully responsible for the maintenance, whether major or minor, tax, property tax, and insurance? Well, if you are my partner, why do not you claim or just take care of certain percentage of that cost? So that's actually that is the problem, which is the discrepancy between the theoretical model and the real implementation. I'm not saying that each and every single company practices musharaka is wrong. No, they are not the same. Some of them actually are going way extra miles to make their model as Sharia compliant as possible. But some companies actually do not even pay attention to those issues, whether by choice, by force, they cannot. That's a completely different discussion. But what they implement actually is not a Sharia compliant musharaka. Let me just put it this way.
Right. So we talked about the ideal situation where there should be a genuine sharing, appreciation, depreciation sharing, and so on and so forth. Is there a bare minimum that should be there for diminishing mushara to be legit or valid in the Sharia?
The bare minimum actually is to prove the ownership. Okay,
Mm.
if it is proven that the mortgage company is owning the property, whether by itself or through a small LLC, which is a small derivative of the parent company, if the ownership is proven, then the whole process is not ribawan because the company does own the property, right? Now, if the company actually is responsible for the loss in case of eminent domain property, like taken by the state, federal government or state government with no sufficient compensation. If the mortgage company is sharing that risk and that loss, that would be even like extra credit. If there is an appreciation or depreciation and they take their share, that will be extra credit. But to answer your question, Akhi, the bare minimum is to prove that there is a genuine, actual legal ownership assumed by the mortgage company, that they do own the property jointly with the customer. Anything else that's not implemented would be counted as a glitch, like a deficiency in the agreement, but it does not actually turn the whole process to be a riba one. We still have, like certain percentage of permissibility involved here. Some people, akhi, by the way, prefer to have like Islamic finance white or black. Okay,
Mhm.
you think that this is 100% Sharia compliant contract, or otherwise this is a non-compliant one. Well, it's not the case. In the real life, always there is a gray area, right? If the contract is uh, like free of any glitches, any violations, that contract is a Sharia compliant one, and it is permitted by default. You don't have to come up with a justification why you want to purchase a house with XYZ company, because it's halal. Just go for it. If that contract does have certain amount of glitches and violations, but still there is an ownership, okay, then that contract will be permitted as needed only as needed, because it's not pure 100% halal. Well, if that contract does have even more and more violations and glitches, then we have to find hajatun massa, like desperate or dire need to permit it, right? Now, if that contract, okay, is a straightforward riba one, riba, 100% riba, then we have to find the darura, which is a necessity to permit it. Because as you know, الضرورات تبيح المحظورات. Necessities permit whatever is prohibited. So you see, it depends on the amount of glitches and violations involved in that contract. Based on that, the fatwa will be issued. Okay, no violations, halal by default. Some violations, halal as needed. Okay, more violations, halal based on dire need. Permit. Okay, riba. Okay, halal based on necessity, or permitted based on necessity.
I think just to build on that last point that you mentioned, because sometimes someone will go say, okay, if the scholar is allowing it for personal homes, now I can apply the same sort of contract on investment homes or businesses or to grow my wealth. And what I've understood from this is that it would not be the same case, because the personal homes may have been allowed because of the higher need of that and some glitches in the contract, versus the other model being you just trying to grow your wealth and investments and so on and so forth.
Well, the fatwa that does permit one-time transaction for primary residence, like for the house that you live in, is an old fatwa issued, I think 35, I think years ago, by Rahmatullah alayhi Sheikh Yusuf al-Qaradawi. Our Fiqh Council, AMJA, the Assembly of Muslim Jurists of America, with all due respect, does not agree with this fatwa. We do not allow like one-time transaction conventional mortgage for residential purposes. We believe nowadays in 2025 that we do have some up to certain limit Islamic alternative available in the market. So mortgaging a house in a very conventional way is not a halal option. You need to go with the Islamic options available, and you need to search which one is the most Sharia compliant one based on fatawa of legit and credible scholars that you know very well. You go with their fatwa and you purchase a house in a Sharia compliant way.
Right. If you can also briefly, describe the spectrum of scholarly opinion that we just talked about. One, which is, the notion of using your first mortgage and the first contract, what have you. Now, because we talked about the muraba, for example, is the least preferred if done correct, and if mostly it's not even done correctly. So, how potentially harmful or away from the Sharia it is. So, what sort of spectrum do we have in terms of Islamic finance and different instruments of financing? And what a layman is supposed to do here. Should he go for the lenient opinion that's available, or go for the most conservative one, or come up with his own opinion? And what are the options here?
Well, the spectrum actually goes from the extreme right to the extreme left, right? The extreme right indicates clearly that all these void, invalid transactions outside the Muslim world, in any land that is like abode of otherwise, like not abode of Islam, is permissible. So, like any kind of void or invalid transactions outside the Muslim world between Muslims and non-Muslims would be halal, because the prohibition of riba is restricted and limited to the Muslim land and not otherwise. And this is actually the Hanafi approach, and maybe some of the Hanabila, support this approach. This is the extreme right, or the extreme left. I'm not sure.
Yeah.
So the
Okay.
other,
Depending on,
like the other extreme of the spectrum uh, uh, is the one that indicates that all these companies, all these attempts are not Sharia compliant, and there is no difference between them other banks. So you cannot even mortgage your house, okay, with a so-called Islamic mortgage company. And in between, you find like the moderate approach that this is Darul Ahd, right? Like a land of da'wah, a land of covenant. Okay, it's not Darul Harb, it's not a land of war for sure, right? And Muslims actually are supposed to practice their principles, right, in Islamic finance, whether they live in a Muslim world or outside the Muslim world. Okay, they indicate that those available or Islamic mortgage companies in the USA, they vary. They are not in the same level of Sharia compliance wise. Muslims actually are supposed to strive to perfect the practice of those companies, pushing them to perfect their practice and to pick and choose the most Sharia compliant one to mortgage their homes. So you see like the extreme right and the extreme left, and the moderate opinion in between.
Yeah. So going into this, right? So for example, if someone were to come and say that, look, you know, yes, this is all great, but me as a family member, I want to get a home for myself, right? And we know that in general, the houses prices are stable, they're going up, and very, unlikely they're going to go down. And in any case, I'm not doing for buying and selling. I want to live and have a place for myself. If I don't do that, I'm paying, about rent, and rent is increasing, and so on and so forth. Now, I have one option, which I can go to the conventional bank, and that's where, if I have a good credit history or what have you, the lowest interest rates I'm going to find. And the bank, they already work on this model, which is non-Islamic, but that's how they make money for themselves and their investors or creditors or what have you. And they're willing to give me a home for 4 or 5%, and it might get a variable interest and what have you. That doesn't matter. I'm probably averaging from 4 to 7%. Worth this, I can keep renting and keep paying, and the rents keep going up. Or I go to an Islamic bank or Islamic financing company, which may have some issues with the contract, as we talked about, and I'm probably paying like a couple of percent higher. What do I do? Like, why should I not go and someone is willing to lend me the capital at this rate and just go and get a home for myself?
Well, my answer would be that we should draw a line between the permissibility and the feasibility of the options that I have. And we are discussing the permissibility and not the feasibility or the profitability. In other words, I'm not here to discuss how to shop around for the cheapest available option. I'm not here to save money. I'm here to talk about haram and halal. So if it is proven for me that this option is halal and it does actually charge 1 or 2% extra, as opposed to the other one that's haram and it does charge 1 or 2% less, I would, as a practicing Muslim, I would go with the halal one. And I'm willing to go extra miles and pay extra money, okay, to make sure that I'm going with the halal option, because committing riba is one of the destructive, severe sins that the Prophet ﷺ was warning us against. So it is worth actually going extra miles and paying extra money to make sure that you go with the halal option and not with the haram option.
Jazakumullah khairan. How is the scholarly spectrum, or even from a Sharia perspective, difference between paying interest, like the example that we have been discussing, versus charging interest?
Both are prohibited according to the hadith of the Prophet ﷺ. لعن الله آكل الربا ومؤكله وكاتبه وشاهديه وقالهم سواء. Allah subhanahu wa ta'ala is cursing the one who devout or consumes riba, and the one who pays it to others, and al-katib, like the script, or the one who documents, and even the shahidain, the two witnesses who just attend and facilitate that riba transaction. وقالهم سواء. And he added that they are equal in sin. So the hadith itself actually is telling you that the one who is paying and the one who is taking riba are equal in committing the same sin, right? No one can say no. Paying riba is halal or less prohibited, and receiving riba is the only haram. No one can say after that, oh, the Quran did not mention paying riba. All the ayat in the Quran are talking about paying riba to interest. Well, this hadith actually is more than enough, to take care of this misunderstanding or misconception. Now,
Jazakumullah.
the only case or the only difference here is that every now and then a Muslim might be in desperate need or in a necessity situation where he or she cannot afford money to fulfill his like dire needs. Okay, someone is running out of resources wants to pay, rent for his apartment, wants to purchase, buy some food, for his family members, to do a medical surgery, to pay the tuition fees, for the kids, something that is really necessary, right? And he could not find anyone to help him with a sadaqah or donation. No one is willing to give him interest-free loan. And the only source he found at that time is to borrow money with interest. Can he borrow money with interest? The answer is absolutely yes, he can, because there is a necessity involved here. So this is the only difference, that you can borrow money with interest as needed, like, whenever the necessity, arises. But you cannot charge interest, because there is no scenario where you are desperate or compelled, to charge interest to others. You can pay others interest based on desperate need, okay? But you cannot actually charge others based on need. That's the only difference.
Jazakumullah khairan. Um, Something related to it is like, how is the approach of buying homes directly from banks when they're, putting out something for foreclosures? It's a bank owning the asset, they are selling it to you. Obviously, the contract would have terms of interest and what have you, and potentially even, variable interest rates and what have you. So is there a difference here if we now go ahead and purchase directly from the bank?
That very particular question actually was raised to our attention as a Resident Fatwa Committee back in 2008, 2009, during the housing industry collapse in the USA, if you remember. And the question was very simple: can I purchase foreclosed property? Okay. We at the Fatwa Committee had maybe three different subgroups. We are seven members or eight at that time. Some of us believed at that time that this is not halal at all, because as you said, like, there is an interest-bearing loan involved. And some were undecided, on the fence. And some believed, no, that this transaction actually is halal. I was like one of two individuals at that time, and I still actually like uphold to my position. I still believe that my position is correct, that this is not an interest-bearing loan. It is not, because when the property is foreclosed, okay, the financing bank becomes the owner. So instead, if you purchasing a house from John Smith, you are purchasing a house from Mr. Chase or Mr. Capital One, right? If it is proven that Chase actually is the owner and Chase is the financier of the house, right? Then you are purchasing a house with an installment. Mr. Chase or Mr. Capital One is telling you, listen, if you have $400,000 cash, give me the money and the house is yours. But if you cannot, I can finance for you, right? And instead of you paying $400,000 cash, I want you to pay me $600,000 within the next 20 years, right? I mean, this is the Islamic interpretation of what's going on. Now, the question here, why they ask you to sign an agreement that, oh, you are borrowing money with 6 or 7% APR. This is how the system works, because Chase actually does not have the luxury and the willingness to wait for you for 20 years to pay off the principal and the interest. They just turn around next day in the morning to the secondary market. They sell the contract and they get their money back plus tip on top of it, like maybe $4,000 or $5,000, right? So because of that, they have to involve so-called unreal nominal interest bearing. Oh, you are borrowing $400,000 from Chase for 5% APR to be paid back within 20 years. Well, there is no loan to start with. And if we
Mm.
go back to the qaida, to the fiqh maxim, العبرة في العقول للمقاصد والمعاني لا للألفاظ والمباني. What matters in transactions is the essence and reality, not the wording or the formality. Well, if you apply it here, you are not borrowing money. You are purchasing a house from Mr. Chase, as simple as that. The landlord here is Mr. Capital One, and he is willing to sell you that house for $600,000, 20 years installment. Any kind of paperwork that indicates riba, well, there is no riba, because basically you are not borrowing money to start with. You are purchasing a house for a higher price because of the installment, which is halal. I still believe that foreclosed houses, the challenge that you face as a practicing Muslim here is that you should not finance with a third party.
Mm.
If it's Chase owned house, it has to be Chase financed house. Be careful, because sometimes in the closing date, someone is jumping, like, coming from nowhere. Oh, I'm the representative of Bank of America, we have an affiliation. Well, you cannot proceed. It has to be Chase owned and Chase financed. Bank of America owned, Bank of America financed property. If that is proven, then go for it. It is halal.
Right. Coming back to some other areas of Muslim life. So when you sometimes other places you need financing are for car, student loans, what have you. Is the sort of contract and the structure, because obviously the amount differs there. Amount is relatively much smaller than purchasing a home. Is there any flexibility or the same principles apply that we have talked about so far?
Same principle applies with very few exceptions here. If your question is about student loans, right?
Mhm.
Our official position as AMJA, the Assembly of Muslim Jurists of America, is that Muslim students have to strive to go after halal by default funding opportunities. There are a lot of financial aids and a lot of grants and a lot of scholarships, and it's really unfortunate to say that millions of dollars are returned unclaimed to the federal government on an annual basis because students are lazy enough not to go after that money. So before even entertaining the idea of applying for a student loan, we have to train, okay, and push and encourage and educate our Muslim students. Do not even think about taking loan. Go and look for those halal by default sources, okay, grants, financial aids, and scholarships. If and only if those halal by default sources are not available, then you may consider taking, subsidized loan. Subsidized loan is a kind of interest-free loan for a certain period of time, most probably given to undergraduate students, not to graduate students, right? And you get what is called a grace period for 6 to 9 months, okay, in which you are expected to pay off the principal with no interest in full. And if you default, then that loan will be counted as an interest bearing loan from the time of default, right? So this is our official position. Now the question here, what if the subsidized loan is not available or available but insufficient? Can you apply for unsubsidized loan, interest bearing loan from day one? The answer of AMJA, our Fiqh Council, is yes. Is yes. Uh, if a student is running out of resources completely, okay, you either borrow money with interest, or otherwise you'll be just kicked out of the program. You cannot even like pursue a degree. Then borrowing money with interest as a kind of dispensation would be fine and overlooked. So you can borrow money with interest for higher education purposes. Someone might say, well, why you allow borrowing money with interest for education, but you do not allow borrowing money with interest for home financing? The answer is the availability uh, of the alternative. If you do not purchase a house, what will happen? You can rent a house. So there is a solution. Yani you will not be staying in the street, excuse me, you and your family members. No, you can just rent a house. But if you do not pay the tuition fees for the program that you are in, you will be kicked out. So the lack of alternative is what makes the difference between the darura and haja. To answer the question, borrowing money with interest for higher education purposes for Muslims living in the US would be allowed, would be permitted as a kind of dispensation whenever those students go out of resources. Now, is there any other exception when it comes to auto finance? Okay, there is no one size fits all here. We need to find out what kind of offer you are having. If the offer is zero APR means interest-free loan for a certain period of time. If you are almost positive that you can afford paying that monthly payment, then go for it. It doesn't mean that this is 100% halal option. No, it is not, because you agree from day one to pay interest. But our fuqaha and ulama differentiate between potential interest as opposed to the actual interest. Okay, avoidable interest as opposed to non-avoidable interest. So they say الحرام لغيره تبيح الحاجة. Whatever is prohibited because of its potential consequences, quote unquote, agreeing to paying interest. For example, holding credit card. You have a credit card. I have a credit card. Everybody actually in this country does have a credit card. When you hold a credit card, you show your willingness to pay interest, right? In case of cash withdrawal, in case of using your credit card for international transactions, sometimes in case of like delaying or not paying on time or not paying in full, you subject yourself to interest. Okay, what will happen? What will happen if you did not use your credit card for cash withdrawal? What will happen if you limit yourself to paying the monthly statement in full before the due date? What will happen? How much interest you will be paying? Zero, right? Because riba actually is avoidable. Okay. Now, uh, الحرام لذاته لا تبيح إلا الضرورة. Whatever is prohibited for itself by itself, like when you go to a bank to borrow money with interest, okay, that cannot be permitted unless there is a necessity. Back to our discussion. If the offer that you receive, like for auto finance, is zero APR, it means that you are borrowing money with zero interest for a certain period of time. If you are almost positive that you can afford paying that monthly payment, then go for it. Because there is a haja for it from one side, and riba actually is avoidable. Riba is avoidable. Now, if the offer is certain APR, or there's 3 or 4% APR, you cannot go with that option because you are borrowing money from a third party for an interest. This is an interest-bearing loan. Some people actually get confused. They think that if you go to a Nissan car dealership, right, and they do not have zero APR, the only thing they have for you, 0 miles and 5% APR, and the financer will be Nissan finance department. Some people think, oh, it's the same body. Nissan is selling a car, Nissan is financing. Well, nice try. Wrong answer. All right? Nissan finance is financially, administratively, legally, completely independent from Nissan car dealership, believe it or not. Yes, they hold the same parent name, Nissan, 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 but they are completely different. Unless otherwise proven. Could otherwise be proven in the USA, yes. And I came across several examples where the car dealership is the car dealership is the owner of the finance department. If you can prove that and there is certain APR finance option, go for it because you are not borrowing money. You are purchasing a car for a markup. Car is for $50,000 cash, for $60,000 installment. In between, they just involve that paperwork or interest-bearing loan for 5%, but in reality, there is no loan. Okay, you are not taking money from you are just purchasing a car and you pay extra because of the installment, right? Now, the last thing to discuss here is what is called the buying out interest. Buying out interest or capitalizing the interest. You insist in purchasing that particular Nissan in which they do not have zero APR for you. They have 5%. Can you negotiate a deal to make it zero APR while paying off or buying out the interest by paying it off upfront? So, for example, car is for $25,000 cash for 25,000, okay, for $30,000 with the interest. And there is no way for you to get it zero APR. Can you negotiate a deal to make it $30,000 price with zero APR with the condition that you pay $5,000 upfront? You perceive it as a down payment. They perceive it as an interest that is paid upfront. Can you go with this option? If this is the only option that you are, having, some people actually with knowledge do allow that. Personally, I do not feel comfortable with it, but I do not dare saying it's haram because there is a sale. Like it's 30,000, you pay down payment, you should be good. I hate it, I don't like it, but I cannot say it's a haram option.
And any issues with the lease, which is, or is it just considered as like long-term rental, or any nuances to look for car lease contracts too?
No, lease actually is not subject to riba because the riba might affect or reflect only two different contracts. Okay, the loan contract and the sale contract. And when you sign an agreement, lease to own or even lease, it's neither sale nor it is a loan. So it's not even subject to riba to start with. I know for a fact that there is a a finance company from behind the scene in the back office. They purchase the car from the car dealership, and that's why someone is checking your credit scores before. I don't care about all what happened from behind the scene, right? What I care about is whatever is on the table. I'm signing a lease agreement, and with this lease agreement, I'll be getting like free tire rotation, free maintenance for a few months, right? Oil change. Within the lease contract, I can return the car whenever I want. I can purchase the car with its residual value toward the end of the, okay, and I can just replace the car. I can return it and get another car like a new one. All these options actually are halal. Now, determining the price of the car from now, that if you want to purchase the car, okay, the residual value after 3 years will be such and such. This is not fair enough, but it's not haram enough, right? It's not haram enough. The most fair way to do it is to wait and find out what is the condition of the car. Okay, how many miles on the car? Based on that, what is the market value of the car? And you can sell it with the market value. So to preset or predetermine the residual value from now to be sold for after 3 years is not fair enough, but it's not haram.
Jazakallah khair. One quick question on a different topic, which is obviously one of the pillars of Islam, and I know you have talked about that topic as well, the topic of zakat. So as a zakat giver, what is upon me? Because obviously now a majority of the zakat is given to major organizations, and as part of their expenses, they have their own head office expenses, and they have the implementation partner expenses, and sometimes also marketing expenses, or even the transaction processing fees, and so on and so forth. What is upon me or any zakat giver to look at from that perspective, and which expenses should be covered? And the notion of everyone opening their shop and claiming portion of the zakat under the category of amilina alayha, that we are implementers, so we also should receive zakat.
I would suggest that we discuss the zakah issue in a different session, because it's now 4:30 on my side, from one side, and from the other side, like this topic is having a lot of details and like nuances. So I don't think it's fair enough to just rush it in a few minutes. If you want, maybe we can arrange
Okay,
for
appreciate it.
listen about zakah maybe after a few weeks from now, inshallah. I'll be more than happy to do it. Yeah. Barakallah.
Jazakallah khair. So lastly, if you can spare a few moments and share with us the Guidance College and the Islamic Finance Program, and how it's necessary, or how it can benefit a practicing Muslim in North America.
Yeah, briefly speaking, Islamic finance is a very promising and very growing industry in the USA, and the Muslim community is a sort of behind when it comes to professional, highly specialized experts in Islamic finance to join and to penetrate the system, to come up with more Sharia compliant options for Muslims living in this society, as far as retirement and cryptocurrency and investing in the stock market and so on and so forth, right? So at Guidance College, we came up with our own custom design masters in Islamic economics and finance, and the main reason behind that is to supply the industry in the USA, and to support the Muslim community with sufficient amount of Muslim, Islamic finance specialists, right? Who understand the functionality and the way that the finance is functioning in the USA, and they do have a very solid background about fiqh al-muamalat and fiqh of transactions, so they can merge, the Islamic finance with the non-Islamic finance and come up with more products, and to facilitate, the financial issue for Muslims in the USA. It's 36 credit hours. It is divided into two different years. If you want to limit yourself to 1 year, you will be getting a certificate of Islamic finance practitioner, right? And if you take one more year, that will be masters in Islamic economics and finance. I highly recommend everybody to go to guidancecollege.org and just search for the masters in Islamic economics and finance.
Jazakumullah khairan, Sheikh, and thank you for staying and going overtime. May Allah subhanahu wa ta'ala reward you and bless it for you. And we hope that we'll build on that light commitment to schedule a follow-up podcast as well. Jazakumullah khairan.
Jazakallah khair. Thank you for having me. Assalamu alaikum.
Wa alaikum assalam wa rahmatullahi wa barakatuh.